Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, May 11th, 2009. Well, we're seeing a down day on Wall Street, folks, and it's kind of been an interesting down day because initially what we did see was the markets gapping down, and then we had a gap and go to the downside, which basically means that the markets gapped lower and then just started to sell continuously. And we saw the markets actually sell, and this is the Spider's 10-minute chart on an intraday basis. And you can see you gapped right here from a close all the way up near the highs on Friday, and the gap actually continued to sell. And we had that gap and go mentality. You had a one little bit of a bounce here on my hardcore trend line analysis levels here at 91.45. And by the way, that number you get basically from taking the lows on Friday. So again, notice that little bit of a tail. You hit that, you bounce slightly. The next candle traded up a little bit, then you came down and slammed right through it. Now, the next level you would go to, obviously, would be the 200 moving average. You can see the 200 intraday moving average sloping up. You came beautifully right into that. What the key about this is also, folks, it actually coincides with gap fill. That's the beautiful thing about this level on the spiders that gave you a little idea that you most likely would have a very significant bounce at this point. See the 200 right here, but also take that level and just kind of draw it right across. And you can see this last tail on last Thursday from this gap, Thursday to Friday gap up, was right in this area, and you knew you were going to come into major support lines as well. So you have to put the pieces of the puzzle together, and that's really the crux of the situation, how to make sure that you enable yourself to make as much profit as possible. That's what we teach you in our research center for our premium subscribers and so forth. So again, move down right here, 200 moving average, gap fill support, two key levels. That's going to tell you there's a high probability of a bounce. The market bouncing higher beautifully, hardcore right here. 3-bar surge, 1-bar pause. Where does the bar pause? Right on top of the green candle. Then again, we test the green candle with this little bit of a tail and rally all the way up. Now, where does this bar take you? Notice how you pierce the opening level. Notice the gap down was right here and the top of the tail was right there. You want to make sure you have those levels in your chart for the first initial pushback. We go right into that level and do not close below it. You pause right there, and then you push above it, and then you do a 1-2 pullback, and then another retrace. Notice this line right up here on the green candle comes up right into the 20 moving average sloping down in yellow, and the 50 moving average here in kind of purple, and the blue trend line. All those are major resistance, and we were looking for that and talking about that to the chat room as being a major level in this market to watch. And sure enough, right into that beautifully, or right below it, that's telling us the market's going to most likely meet significant resistance, and the market starts to retrace all the way back down, get a little bounce, continue down, hit the green line again. And we should all know by now the green line is good support or resistance depending on which side you're on. You get a nice little bounce off the green line. Where does it go? Right into the 20 moving average. See the 20 continuing to slide down there? And at that point, the market just starts to sell. And where have we come now? Down to the 200 moving average again, right here, which is again good support at a 200 moving average. Believe it or not, the second hit here of the day on the 200. Now, our theory, as our theories go forward, you guys can understand them that basically every hit of the moving average becomes a little weaker. So this was the best one. This is the second best one for a scalp or a bounce. And then after that, it really gets too low of a probability that you're going to get a bounce, and eventually you will break. So we'll continue to watch this, but right now you have very good support here at around 91.25 on the spiders. Resistance, minor resistance at 91.45. Then the 20 moving average, which currently sits at 91.60 or so. And then after that, you actually could have a continued move up to the highs of the day right up here around 92 if we were to get there, plus the 50 moving average and the blue line and so forth. But for the most part, now you're in a kind of an interesting area in the markets right now on an intraday basis because you're continuing to hammer on the 200 here. If that breaks, it's going to yield a drop all the way back down to a double bottom right in here, anywhere between 91, give or take $91, and maybe even as low as 90 on the SPY. All right, I'm going to go over a couple other charts, but I just wanted to point out how intricate and the levels today worked so beautifully. Look at the bounce right here off the 200. I mean, that was a huge bounce. Over $1 on the spiders, really. Then the pullback right to the green line, the little mini bounce, and now a retest of that 200. Again, this is a little bit of a bear flag off of this move down. Notice the in spirit of bear flag, which tells us right into a resistance area that the market most likely will fall. And again, it's all about putting odds in your favor. Now, there's a couple things I want to discuss today. Number one, bank stocks extremely weak. I want to show Goldman's chart because Goldman initially was holding up and it did a fake out breakout. And I want to show you that fake out breakout is what we call it. All right, here you have Goldman gapping lower today, and you can see the sideways trading. Even when the market was collapsing early on, Goldman was not collapsing. And ultimately, going into like the 11 o'clock hour, Goldman broke out. And see the late line here for a breakout? This got a lot of people caught off guard. And really, what you want to remember is breakouts at highs a day. The highs of the day have to be warranted going to be very closely watched. Now, I'm not talking about just a high of the day, but ultimately the high on the daily chart is very, very extended, and you have to always be cautious up in those levels, especially coming off the kind of the pump up on the stress test. Remember the stress test, and something I wrote on the blog over the weekend, actually last night. You can find it on the free blog on our website, inthemoneystocks.com, the Rant and Rate blog, was that word has come out over the last couple days that the stress test results were actually much, much more severe against banks and capital requirements, and the bank CEOs and the bank stocks or the bank companies threw huge fits, like tantrums, like kid tantrums, and ultimately the Federal Reserve backed down. They put their tail between their legs and backed down on this, which is pathetic to me. I mean, here you have a governing body which controls our financial system, basically, and they're backing down to these bank CEOs. I heard Bank of America, the report from Reuters actually, was that they needed $50 billion, and the Fed lowered it all the way back down to 33.9, I think. It's just unbelievably ridiculous in my mind. It scares me to think that, the Fed came out. Remember, the Fed is probably going to be even more conservative than what they'll really need, and if the Fed says they need tens of billions more, and the bank stocks fight them and get it reduced, those tens of billions, then you have to wonder later on, in a year from now, are we going to need more bailouts? Are we going to need more, these type of things? Because, that is a very scary situation and unbelievably infuriating in my book to see that our government or our Federal Reserve, which isn't technically part of the government, but the governing body of our financial system is backing down like this. But in any case, Goldman had a breakout, but it was too high. Notice how gap fill. Look at gap fill. You have to understand gap fill as well. We went right into gap fill on Goldman, and then the reversal takes place, and Goldman just has started to collapse today. Big drop, bear flag. All right, notice this in spirit of bear flag right here. That's telling you more downside is coming as long as it stayed below this 50 and inside bars. Inside bars, more downside coming, and it pierced right through the 200 moving average, and you're getting a little bit of a bounce on Goldman right now. But nonetheless, a very, very good, solid sell-off here in the market. So we'll continue to watch this and pay attention to everything that happens, and just continue to update you. And tonight, in the nightly video that our premium subscribers have access to, we're going to crunch all the numbers, give you keep turn dates, and a bunch of other pivot points on these, what to watch and everything. Now, the other thing that's been strong and why the markets are actually holding up as well as they are is because the NASDAQ and the tech stocks, the NASDAQ 100, the Qs, and so forth, have been so strong. Apple gapped down today and then rallied all the way up in a beautiful move to right underneath the 200 moving average, and now it's consolidating here, and you can see it's kind of just bouncing back and forth, zigzagging below the 200 and above the 20 moving average. So you have this little bit of a kind of triangle-ish type shape developing. The question is, which way is it going to break? Is it going to break up? Is it going to break down? But today, very impressive on a lot of these tech stocks. They were getting hammered on Friday. They were extremely weak when the market was strong. Now they're the strong point in keeping this market from really collapsing. All right, let's go back to the spiders intraday as we end this video today, and you can see the support. I just mentioned this support line right down here. Look at the bounce you've gotten. You got a nice bounce all the way up, a nice tail there. Now we'll have to just continue to watch. The green line's resistance, the red 200 moving average will be support. If that breaks, you have this level right down here at double bottom, right around 91 on the spiders. 60-minute chart. All right, there's a bunch of channels here I want to just draw in for you guys. There's a bunch of channels that have been in play, and you're actually nearing the low end of the channel, and you can see it right here. Look at this support line. This is why you're finding support. Not only is it 200 on this moving average of this 10-minute chart, but if you go to your 60-minute and draw lines under here, right to here, notice this point right up here. This is a major level. If this channel breaks, you're going to have a good move most likely down to this point right here, give or take. All right, right around this level right here on the spiders at approximately $90 and $90.50, right in that range, which would be a collapse right to the 50 moving average on the 60-minute. But you can see how that's working. Look at how beautiful this is. Hit, right here hit, right here hit, here, and you're right on top of it now. And the question is whether or not we break this afternoon and really start selling off. The one thing working against this market is you have very, very light volume today, and oftentimes with light volume, they can try to float this market up and save it. So we'll have to see if more selling comes in or not. But right now, going back to the 10-minute, look at the bid coming in, and we just called this, folks. Good support here off the 200. Second hit is usually a very solid support line, and you're seeing that retrace bounce right here in a beautiful way off a little possibility of a tail here, which could be a bullish signal as well. Again, I'm not necessarily looking for us to race up, but I think you could easily get a continued little bit of a bounce up in early afternoon trading into the spot crude close at 2:30. Then we'll see what happens from 2:30 to 3. All right, folks, just a reminder, we'd love to have you join our chat room and our premium services. Obviously, the Research Center includes everything on the website below. I think about 5 services just included in $49.99 a month. Very, very inexpensive for the amount of education and guidance that you get, which is extremely accurate, as you can see from these videos. Hope to have you aboard. Take care.